want to take a look in particular at Chinese banks. I mean, record lending. Surely there are concerns over an extension of loans.
Yeah, we've been doing quite a lot of work on that the last couple of months, trying to dig down into the numbers and trying to get a good idea of where this money, where this new credit has been allocated. I mean, their conclusions were that there were no real immediate problems as far as we could see. Many of these were infrastructure projects, loans to local government funding platforms, which obviously have been under scrutiny as well. But there's no real near-term catalyst for any major concern. But the breakneck pace of expansion really it requires more capital. And there's been one thing that's been weighing on stocks and sentiment really has been the, expected equity raises from the major banks. We think they might go to the pot again in a couple of years if they continue at this current pace. And you've got to remember as well, once you look at the March numbers as well, when you strip out the bill financing, which is very short-term lending, the year-on-year growth and underlying loans was still quite strong. So this is clearly unsustainable over the medium term. So it's definitely something we need to keep an eye on, and definitely something the regulators need to be doing something about.
There must still be some concern. The government says, hang on, okay, let's target 22% less loans this year, but that's a fall from a record that we've seen. I mean, surely that's still an expansion and still a huge expansion in loans.
Yeah, definitely. I mean, there's going to be solid loan growth this year. There's no doubt about that. I mean, what we want to know that there's an efficient allocation of, capital. One thing we've been concerned about is what we call the malallocation of capital, the misallocation of capital into lots of underperforming assets. So, the NPL numbers look fantastic. The earnings will look good. But really, from a credit guy, I'm always focused on the downside. If I buy a bond of one of these banks, I'm worried about getting my money back in 5 years' time. So we're always trying to look at the potential downside risks here. So we want the banks to come out and raise more equity. Would be prudent, but it's a difficult position for the regulators here. It's very much of a balancing act. You have to remember, though, in China, it's a self-enclosed economy. They're not reliant on international money. They're not reliant on wholesale funding, and they're majority owned by the government. So basically, the government can do whatever they want. As we've seen in the past, they have swept a lot of the NPL numbers and non-performing loans under the carpet, and don't underestimate the ability of the authorities to do that again.
Lots of correlation between the banks and the property sector, and we saw this morning the report saying that prices have risen about 13% from a year ago in 70 cities. I mean, and we're talking about a potential bubble bursting in the property sector in China.
Well, I think, from the bank's perspective, the amount of, allocation they have directly into property and property developers is quite small. But what we are concerned about is the indirect exposures through local government funding platforms, through corporates that have been borrowing for, to buy, for example, property. So, there's definitely some speculation going on there. Oh, and there's always this overwhelming body of evidence to suggest that, the situation is worse than it actually is. But so far, I mean, again, the government has come up with some cooling measures. Hopefully they're going to take an effect as the year progresses and push out some of those speculative elements.
How about Korean banks? They seem to have been pretty resilient. They've come out from the crisis really well. You're liking Korean banks?
Yeah, we're pretty positive on Korea. I mean, what they really surprised us in their resilience last year. We were expecting credit costs as a percentage of total loans of around 150 to 200 basis points. It came in around half that level. This year will be pretty boring, I think. It'll be fairly flat. Loan growth, single-digit, margin stabilisation, but NPLs could even creep up a little bit, in fact, as we saw in the first quarter. So not a strong recovery, but stable.
Potential risks?
Potential risks, I think in places like Korea, Japan, a double dip. If we do go into a double dip, recession, a lot of these corporates did manage to cling on last time, but that was because the GDP rebounded so quickly. This time around, if we get a more protracted economic downturn, we would see more significant, more pronounced asset quality problems across the region.
That you're liking, but how about those that you don't favour at all? Any banks, any banking systems you don't particularly like?
Well, it's difficult to get too excited about the prospects for Japanese banks. They're coming out with earnings this Friday, and again, we'll probably see core underlying profitability at the lowest level in several years. There's potential consumer credit crunch there with the new money lending laws coming in, which will impact companies like, Promise, Acom, Eiffel, Takefuji, etc. So there's some uncertainty there. But the banks themselves, I mean, there was an announcement this morning, or some reports this morning, that Mizuho might be raising more equity. We welcome those sort of developments from a credit side. But again, it's one area that we're not liking that much. India is also an area we need to keep an eye on, particularly the public sector banks. They need more capital at some point. They are growing strongly, and potentially some of the problems from restructured loans could start to emerge later this year.
Good stuff. Jason Rogers, Barclays Capital, we thank you.